I have been a full-time trader since year 2019, and in all these years, one common question I have been asked is, can you give me one strategy which can give me profit every day? Can you tell me one setup where there is a potential to make daily income from trading? And my answer always has been no, there is no such strategy in price action where you can profit every day, because in price action, the setup which happens today, it may not happen for next 3-4 days, or some setup may happen continuously for next 2-3 days, but it may not happen for next 15 days or 1 month. So there is nothing like daily income strategy in price action, and that has been my answer for all these years. But around 8 months back, something changed. That means around 8 months back, I entered crypto world. I started doing some backtesting in Bitcoin, and few months back I have observed one very specific setup in Bitcoin which happens every day. That means every 7 days in a week, every 30 days in a month, every 365 days in a year. That means this setup happens every day, and which has a very high probability of giving daily income, though not 100%, not all the day, but you will see that most of the days this strategy can work. And that I'll show you with the back testing, that how many times it has worked in maybe last 1 year. So out of 200 plus videos I have on YouTube, if there is one video which you should watch till the end, then that is this video, because in this video I'm going to explain everything A to Z. That means how this setup works, what are the criteria you have to see, and I'll do the backtesting on backtesting platform to show you how it worked historically. Then I'll show you demo on Delta Exchange also to how to place this order in the live market. So this all will be discussed in today's video. And the strategy is so effective that I've included the same strategy in my recently launched course, that is Bitcoin Options Mastery. In that course, there are total 8 strategies, and out of that 8 strategy, one of the strategies is this. And as a complimentary, I'm sharing this strategy with all my YouTube subscribers. And if you don't have Delta Exchange account to trade Bitcoin, then go below this video in the description section. I given the Delta Exchange link. You can open the Delta Exchange account within minutes, and you'll get 10% discount on your trading fee for first 2 months. Now, without wasting much time, let's go to my laptop and let us see what is this high probability daily income strategy is all about. So now let us start with the presentation on what is this strategy is all about, and let me start with the pros and cons of this strategy. Pros are very simple to execute. There's no much data you have to see, or you don't have to apply so many indicators or anything. Very simple to execute strategy, very peaceful strategy. Next is less trading fee, because when you are trading in Bitcoin options, you should know that fees are in any crypto platform, trading fees are higher than how you trade in Nifty Bank Nifty. If you trade Nifty Bank Nifty on any platform like Zerodha, Upstocks or Fires, you will see that they have a flat trading fee. Most of the time it is 20 rupees per order, irrespective of your quantity or position size. But here in crypto exchange, your trading fee depends on your order quantity, premium, notional value and everything. So that's why when you trade in crypto, also important to keep a close watch on what is the trading fee you are paying for that order. So here in this strategy which I'm going to discuss, have a very less trading fee. And next is, that is the best thing, this setup happens every day. As I said, 7 days a week, 30 days a month, 365 days a year. That means every day, no Saturday, Sunday, no holidays, every day, Monday to Sunday, this setup happens. And very high win rate this strategy have. Now, there are some cons also. First is not a 100% win rate strategy, though it's a very high win rate, but not a 100% win rate. Lower risk reward. That means when you have any strategy which have a very high win rate, then you should know that win rate can be excellent, but risk reward may not be too good in that strategy. Or you may find some strategy which have a great risk reward, but win rate may not be good. So you will not get in trading where both your risk reward also excellent and win rate also excellent. You have to compromise with one thing. That I'll show you what is the risk reward we follow in this strategy. Need to follow strict price action rules. Okay. Next is, this strategy is not a jackpot kind of strategy. This strategy is making small wins every day. Okay. Not like hitting the jackpot. And this is a boring strategy. Okay, this is not a very exciting strategy that where you see that some of the option buying or heroes or zero, which is very exciting. When you place the order, suddenly it goes up, comes down, you feel that excitement like how you are playing video games. This strategy is not that kind of strategy. This is a boring strategy. So this is the pros and cons of this strategy. So now why only this strategy is in Bitcoin options, not in Nifty, Bank Nifty, not in commodities? And the reason is Bitcoin has a daily expiry. Okay. Unlike Nifty, Bank Nifty or commodities where we don't have daily expiry, Bitcoin have a daily expiry. Next one is Bitcoin is 24 hours market. Bitcoin's open 24 hours, 12 to 12. It doesn't close at all 365 days it is open. Bitcoin volatility different in each session. Since it's a 24-hour market, it goes through different session, Asian session, European session, American session, Australian session. It keeps revolving around different country sessions, right? Because it's a 24-hour market and Bitcoin have a different volatility. You must have heard of people saying that Bitcoin is a very volatile instrument. Yes, it's a very volatile instrument, but it behaves different in each session. Next is Bitcoin option selling needs less margin. Okay. Unlike in Nifty, Bank Nifty, where you need very high margin, right? Earlier margin was little bit less, but nowadays you know that if you want to sell even one lot of Nifty or Bank Nifty, you need lakhs of rupees to sell one lot. But in Bitcoin options, you don't need very huge margin to sell Bitcoin. Now, let us discuss the logic behind the strategy. I said Bitcoin moves in a different way in a different session. So when it comes to Asian session, most of the time it moves in a calm and tight range. Okay. So that means what is the Asian session? This is the IST. Okay. Indian Standard Time. 5:30 a.m. to 2:30 p.m. in Indian time, it is Asian session. Asian session, most of the time Bitcoin is a very sideways. Okay. Though it's a very volatile instrument, but Asian session normally it is seen staying in a sideways and a tight range. Okay. Around 80 to 90% probability of staying within 2% range based on historical data. So let me give an example. Suppose Bitcoin trading at 90,000. What is 2% above? 2% above will be 91,800, right? 91,800 will be 2% above, and below 2% will be how much? 88,200, right? So this will be 2% above or below. So that means around 80 to 90% of the time Bitcoin likely to stay within 2% above or below almost 80 to 90% of the time based on historical data. Bitcoin historically shown highest volatility during US session, which starts at 6:30 p.m. Indian Standard Time. Okay, and Bitcoin has a daily expiry at 5:30 p.m. Indian Standard Time. So India Bitcoin daily expiry happens before US session opens. So that is the advantage we have while trading Bitcoin option. That means US session opens at 6:30 p.m. but our expiry happens at 5:30 p.m. That means before the high volatility starts, our expiry gets over. So that means we can save ourselves before the volatility picks up. So we are looking to short OTM call and OTM puts which are around 2% away during Asian session and close it before 5:30 p.m. That is the strategy in a nutshell. This strategy is to capture theta decay. That is the because of the daily expiry, theta decay will be very high, right? And volatility contraction because of the low volatility session. Okay. So that is what this strategy in a nutshell. That means we take the trade in the Asian session within 2% of the range. We close the trade before 5:30, before the US session starts. We sell OTM call, OTM put 2% away, and we take the theta decay advantage and volatility contraction. Now let us see in more detail about this strategy, about the risk management, everything. And the name of this strategy is 8 a.m. Asian session short strangle strategy. Now you got to know what is the strategy all about. This strategy is nothing but short strangle strategy, but I have named this strategy as a 8 a.m. Asian session. That means we take the entry at 8 a.m. every day. Okay. And this strategy is part of our new course, which I already said. We launched this new course called Bitcoin's Option Mastery, where I discuss total 8 strategies both for option buyers and option sellers. Out of 8 strategies, one of the strategy is this strategy, which I am sharing with all of you. Instrument is BTC, Bitcoin current day expiry. Entry time 8 a.m. 2% OTM call and put if IV is high. If IV is low, that means premium also will be low. Then you can go for 1.5% OTM call and put. Okay. So 2% is the standard, but sometimes IV can be low, then premium also low. So 1.5% also away. Aim for delta neutral. That means equal premium on both call and put side. So that means suppose you see call side you want to take a short trade and you see that premium is 20, but put side you see that it is only 5 rupees. Okay, I'm telling rupees, but you know that Bitcoin traded in dollar. Okay, consider it as a dollar for your understanding. I'm just saying rupees. Okay, 20 rupees and 5 rupees, then you should not take this put option because it is not delta neutral. Look for something which is 18, 20 or 22. Okay, I'm not saying that exact 20 call option mean you should take put option 20. Somewhere near also fine, 80, 21, 22, 23, that is all fine. But don't go for somewhere 20 and here it is showing 5 rupees or 6 rupees. Then you should not, because it's not a delta neutral. Okay. Next is ideal combined premium 40 to 60. Normally it is seen on regular days, 40 to 60 is commonly seen combined premium around. Okay. Sometimes Saturday, Sundays, normally premium is very less in Bitcoin. That time you may see less premium, especially on Sunday and Saturday. And strategy is short strangle. And iron condor also another strategy you can deploy here instead of short strangle, which has a higher win rate but low risk reward. Now very important is risk management. So what is the stop loss we keep? We keep stop loss is about 400% of the premium collected. Why? To give the trade room to breathe against noise and whipsaws and prevent total wipeout on a trending day, because anything can happen in the market. As I said, most of the time Asian session market stays like this, but sometimes suddenly it can happen that suddenly some news can come in the Bitcoin and suddenly it can start going up or start going down. That time we have to save ourselves by keeping stop loss, right? So now many people may be wondering that 400% means such a huge stop loss. Now I'll tell you pure mathematics behind keeping this much stop loss. What is the risk reward you are following this strategy? So suppose you sold a call option at 25. Okay, then what is the stop loss you will be keeping? Stop loss you will be keeping 125. You will keeping stop loss at 125, not 100. Even though 400%, why not 100, 125? Because you already collected 25 rupees premium, right? From whatever the premium you have collected into 4 times. So you'll keep stop loss as 100, but since you already collected 25 rupees as a premium, so on the system your stop loss becomes 125. Okay, on the system your stop loss becomes 125, but you are not taking 125 risk, you are taking the risk of 100 only. Suppose you have taken a call option shorted at 25, put option at 25. So what is the total premium you collected? You collected 50, right? That is your maximum profit in this trade if market stays sideways, right? If 25 rupees go to 125, okay, suddenly big move comes and call option 25 goes to 125, then what happens? How much you lost here? You lost 100 rupees here, right? You lost 100 rupees. What is the maximum profit potential in this short triangle? 50, right? But you lost 100 rupees here. But what about this trade? Call option will go 125, but put option will start melting like anything because now it is far out of the money, right? Most of the time you'll see that when call option goes to 125, put option comes to 1 rupee or even less than 1 rupee. Most of the time you will see, okay? For this example, we will take as a 0 only. Okay, it may be 1 rupee or less than 1 rupee. Put option becomes 0 from 25. So what is the profit you made here? You made profit of 25 rupees in put option. So put option you made profit of 25, call option you made loss of 100. So what is your loss in this trade? Your loss in this trade is 75. What is the profit potential I said in this trade? 50. If that day instead of going up stayed sideways, you would have made a maximum profit of 50. If the stop loss hits, you will lose 75. What is the risk reward in this trade? Risk reward is 1.5 raised to 1. That is what the risk reward we following this trade. So we are losing 1.5 rupees to make 1 rupee profit. Okay, remember, as I said earlier, when you go for a strategy which have a very high win rate, then you should compromise with risk reward, because win rate is good, then it will compensate. That is the pure mathematics, right? But when we have a strategy with a very good risk reward but win rate is less, then risk reward will compensate the win rate, right? That is how the trading works. Here, since we don't have a great risk reward, but since we have a very good win rate, right? That is how it compensates. So that means we risk 1.5 every day to make 1 rupee profit. That is how it works. So that means every strategy we say that first you should look for a stop loss. Where is your stop loss? Then take the trades. But same time in this trade, you have to first fix the target. Suppose you are a trader, you want to make a profit of 2000 per day in this setup. So suppose you are a trader, you think that you want to make 2000 rupees every day in this setup, then you should automatically you know that your risk will be how much? 3000 rupees. Okay, this will be your risk because What we said, we are following risk reward of 1.5 to 1, right? So whatever your target, your risk will be 1.5 of that if you follow this risk management rule. So somebody have a target of 5,000 rupees per day, then you should ready to risk 7,500. Okay. Somebody wants to target 1,000 rupees per day, then his risk will be 1,500. That is how risk management rule in this setup. And also you can keep the overall MTM stop loss like fixed daily risk. Suppose you want to risk only 2,000 per day, you risk only 4,000 per day. If you are good in algo and all this, then you can automate this strategy every day at 8 a.m. entry, stop loss, whatever I said, and you can put overall MTM stop loss also, whatever I said. And another thing you should remember, though I said 1.5 to 1 risk reward, sometimes there can be slippage. Trading fee you should consider, and sometimes volatility expands. So that all you have to consider, but we are taking overall risk reward as 1.5 to 1. Okay. If you are coming from Nifty Bank Nifty trading, you should not do any adjustment in this strategy. Why? Because this is a fire and forget strategy. That means just you execute the trade, you keep stop loss, right? So you should not move strike and no adjustment. So that means if the trend breaks you, you take the stop loss and exit the trade. Why I am saying that no adjustment in this strategy? Because here, as I said earlier, when you are trading in Nifty Bank Nifty, most of the broker will give you 20 rupees per order, right? So it is not a big 20 rupees per order irrespective of quantity. But here in crypto exchange, whichever platform you take it, most of the time trading fee will be higher. So if you keep doing adjustment, you will see that maybe your trade turned into profit, but when you go and see your trading fee, you see that you must have paid very huge trading fee. So that's why no adjustment in this strategy. Now, what is the target and exit rules? If both options decays to almost 80 to 90%, you need not to wait till the full decay. And most of the time you see that if market stays sideways till 130, you'll see that almost 80 to 90% of the decay happens by 130 only. Okay, you can close by that time only. You don't have to wait till the expiry till the 5:30 p.m. Conservative trader can exit at 12:30 p.m. or just before European market opens if trade is already working and more than 60 to 70% decay already happened, or exit all position at 5:15 p.m. but try to close before due to gamma risk. Okay, there is something called price action based exit also. That means if you see any breakout sign like day high, day low breaking, PDH, PDL breakout, then exit all position or place stop loss to break even. When to skip the trade? Avoid this 8 a.m. short triangle if strong trend already started before 8 a.m. 8 a.m. you see that day from the morning before 8 a.m. market is in the strong uptrend. That time, even though 8 a.m. you want to take the trade, don't take the trade because trend can continue. Okay. Or you see that market is falling, and 8 a.m. you want to take the trade, but you see that market already in a trend, downtrend, then don't take the trade on that day because trend can continue and your stop loss can hit, which even though you keep it 2% away. Higher time frame in the strong uptrend, downtrend. So you may see that on the 15 minutes time frame market is trending sideways, but when you go to daily time frame, it is in the strong uptrend like this. On daily time frame candlestick, that means also that time also better to avoid because for suddenly breakout can happen and price can start going up. High time frame breakdown exactly at 8 a.m. or just before 8 a.m. Major global event news expected or already out. Next is call put premium asymmetry is extreme. That means call side is trading at 80, put side 10, or put side 80, call side 10. So that means there is no match, right? That means it is not balanced. You can try to match the premium by going near to or away strike or something like that, or you can entirely skip the trade because when call and put premium are like this, that means there is a high volatility in the market. If combined premium is too low, then also better to skip the trade. That means if less than 20 or less than 15, less than 10, if it is too low, such time also you can skip the trade. And next is historical volatility is extremely high, more than 70. That time also you can skip the trade because overall volatility is very high. Though you may get very good premium like 100 rupees each on the both side, okay, or 150, 200. Sometimes you may think that premium is too good, but it can easily hit that 2% also, and your stop loss can hit because volatility is high in the market. So this is about Bitcoin 2% range spot strategy performance from April to December 2025, 8 a.m. to 5:30 p.m. You can see that from April to December, most of the time it stayed above 90%, except in the April and except in the October. Most of the time you can see that it stayed 90% or above, right? Even in December, you can see that almost 96% it stayed
within 2% range, right? Total average is coming to around 90%. But you should remember, this is on the spot, not on the option, okay? And also this data is generated by AI. So you must authenticate this data with your own manual backtesting, because you know that sometimes AI also can do the mistake, right? And another thing is that this win rate is based on Bitcoin spot price action, not on the option. Okay. Specifically, how many times price did not close beyond 2% above or below 8 a.m. to 5:30 p.m. And this is not an options win rate. Option win rate are influenced by additional factors such as volatility, theta decay, gamma risk, delta sensitivity, and all this. For that, we have to go to backtesting platform to see how this strategy worked in the options. So that's about this presentation. Next, we'll go TradingView chart demo. Okay, I'll go TradingView and I'll show you last 2 months how many times it stayed within 2% range. Backtesting the strategy on Algo platform and live order placing demo in Delta Exchange. I recorded that video on January 16th to include in my Bitcoin option mastery course. Same video, I'll play it here so you'll understand how to place the order, how to place the stop loss, how to do the position sizing. Now let's go to TradingView first. So now this is 26 January. Now what I'll do before we see the backtesting on Algo platform, first look at the spot chart to see how Bitcoin stayed in Asian range from 8 a.m. to 5:30 p.m. So I'm recording this video on 26 January. So what we'll do is we'll see from last 2 months, the green line what you see where I kept the cursor here, that is the 2% away from this candle. This is the 8 a.m. candle, and the red line is 2% away on the downside. Okay, so upside and downside from this candle. The blue box what you are seeing here, that is the 8 a.m. till 5:30 p.m. Okay, so now let us just go back and let us see how it worked. Okay, this is on the spot chart. Let us see how it worked in December and January. You can see that it stayed within 2%. This day, 20th January, you can see that it came near the 2% range, but it did not close beyond it. So you can see that here it is staying within 2% range. Here also staying within 2% range. This is the month of January. You can see that still staying within 2% range, right? So January, you can see that almost January, you can see that entire month, I think entire month, it did not close beyond 2% range, right? Entire January month. So till here, we have from 1st January to 26th January, and not a single day it went beyond 2%, right? Now let us see about the December. December, you can see that December month, you can see that this candle went below that 2%, but it was after 5:30. And even though spot chart, it closed before 2% away. But when you see this kind of huge candle, volatility would have expanded and your stop loss would have hit on the option. But spot chart, you can see that it stayed within 2%. Okay. Options will see it on the backtesting platform, but here I'm showing you only on the spot chart. Here you can see that it went and touched the 2% but did not close it, right? So here you can see that December 19th, it broken the 2% away strike. 19 December, it broken the 2% away strike. Here it did not break. Here also it did not break. Here also it did not break. Here you can see that finally around 5:15 it made a huge candle and touched 2% but did not close beyond it. For example, if you have taken entry at 8 a.m. till almost you can see that till 3:30 p.m. it was staying in a sideways, right? You will see almost 90% of decay happens by 3:30 p.m. Okay. So even though there was a big movement around 5 o'clock, but by the time you would have closed the trade because 90% of decay almost would have happened by 233 only if price stayed within range. Okay. So you can see that here you can see that still within 2% range. And this is the 5th December. So this is the 3rd December. And this is about the 2nd December. And this is about the 1st December. So you can see that December month only once it went beyond 2% on the spot chart. So that means out of 31 days in December, only one day, that means 30 days it stayed within 2% range. But what I said, if spot chart it did not went beyond 2%, doesn't mean that it should not hit the stop loss on the option, because options, other factors also important. Now what we'll do, we'll go to this platform called Algo Test platform, where you can do the back testing about the same strategy on the options. Okay, come here on the backtest, click on the strategies. Okay, we'll come to here, Delta Exchange. Underlying, we'll select Bitcoin, right? And what is the timing? We selected 8 a.m. We'll put 5:15 p.m. as we exit the trade. But as I said, Not necessary that you should wait till 5:15, 5:30. Okay. Now we'll come to the leg builder to put the stop loss, everything. We'll, for this video example, we'll take 1000 lots. Okay, that means on full Bitcoin call option. Okay, here we have to select 2% away strike, right? We have to come here, percentage of ATM. Here we have to keep as 2% away strike, right? Stop loss we discussed how much percentage wise, 400%. So we'll put 400% here. So now we have to add another leg, right? Because it's a triangle. We have put the call. Now we have to put the put, come here and copy it here. So only you have to change the put here. Other things will remain same, 2% away strike, percentage wise 400%. So that's it. Now what you have to do? Now start date, it is taking January 26, 2025 to January 26, 2026. Okay, that means last 1 year. Okay, one mistake here, I have not done the plus because here you have to make plus because it's a call option, right? This is a call option. This is the put option. So this you have to do minus only. Here you have to change it to plus and then click start backtest. Okay, it will take few seconds to give the backtest and it will show the what is the win rate, what is the winning streak, losing streak, month wise, day wise, everything. And this is the strategy. You can see that overall January to December, you can see that except April month, every month this strategy would have given profit. And you can see that cumulative PNL graph, you can see that from here to here in a strong uptrend, right? So that means it's a profitable strategy. And another important thing, many people miss when they do the back testing, it's about taxes and charges because you are paying the trading fee, right? You are not trading free. You have to pay the trading fee. These taxes and charges, what you see, that also include the trading fee. So you have to keep it on. Next is slippage. When you are trading in Bitcoin options, at the money option normally have very good tight spread between bid and ask. But when you are going for OTM option, okay, out of the money option, slippage will be little bit more. So what we'll do is we'll put around 5% as a slippage and we'll recalculate. And you can see that this is the result. Okay, this is the final result. Except April month, every month this trade would have worked, right? This is the cumulative panel graph and this is the drawdown. You can see that here big drawdown is showing around 6th April and it recovered again back on 30th June. Why there is a big drawdown it is showing? Because you know that we are not put the filter, right? We are not put the filter on position sizing, most importantly, right? Position sizing, we said based on how much lots we have to trade, we have to adjust that. So this is without putting any filters on whatever we discussed. Like we discussed, we will not trade when historical volatility is more than 70. So that is what this is, just an understanding, just an example about how this strategy would have worked if you have not put any filter or any position sizing formula. Okay, so this is the overall profit. You can see that win percentage showing around 78%. So that's what we have seen. When we have seen the spot chart, it was showing 90% win rate. But I said that is on the spot chart. Options you have to see again because option price moves on volatility, delta sensitivity, everything. And you can see that maximum winning streak is showing 12, maximum losing streak 3. So that means this strategy is not 100% of the time. There can be losing streak also that you should ready to accept, right? This is the day wise. So you can see that this is how day wise it worked. This is the January and this is the February. If you keep going like this, you can see all the month. So let me just give you example how to read this. For example, this is the date February 6th 2025, 8 a.m. enter the trade and same date exit because it's a intraday, exit time 5:15. Call option 2% away, that day it was 99,200 on upside, downside it was 95,200. On the call side, premium was 31, put side it was 25. And 5:15 p.m. where we want to exit, and that same 31 was trading here and 25 was trading here, and overall profit 2653 here, 2159. Overall you would have made 4782. This is just for an example how to read this. Okay, now we will go to Delta Exchange. I have made a demo video on 16th of January, which I have included in my Bitcoin option mastery course. Same video, I'll play it again here so that you understand how to take the trade, how to do the position sizing, how to keep stop loss, everything. Let me play the video now. Welcome to this live trading on how to place the order in 8 o'clock short strangle strategy. I'll do the proper demo here, how to place the order and everything. Time is now 8 o'clock in the morning. So I said you have to place the order at 8 o'clock in the morning, right? First we have to do the analysis. So I have come to the trading view now, and you can see that at 8 o'clock, Bitcoin is trading around 95,635, right? I said either you can have an indicator where it can draw 2% above and 2% below line. Like you can see that on here, 15 January, green line and red line, where yesterday it was drawn. That means 2% away from this candle opening, 8 o'clock candle, and this is 2% down. So now at 8 o'clock today, you can see that already that line is showing here. That is 97,565 and around 93,728. Okay. So you can have that indicator, or otherwise another simple method is come here, click this long position and keep the mouser on that 8 o'clock opening candle and drag it until that is showing 2%. So you can see that now it is showing 2% on the upside, and downside also you can see that it is showing 2% now. Okay, now already you know that your 2% upside and downside is around 97,600 and 93,704. So we have to go to nearest strike now on Delta Exchange, and then we have to sell call option 2% away, sell put option 2% away. Another thing I said, price action criteria, whether is it making any breakout? No, it is not making any breakout. It is between the previous day low and previous day high, days high and days low, though it is making a range consolidation, but it has not broken any important support or resistance. That means we can take this 8 a.m. trade, right? Write it down, 97,600 and 93,728. So that is our range. Okay, now you can see that I have come to the Delta Exchange, and you can see that this is how the interface looks like when you come to the main Delta Exchange interface. But we are trading in option, right? What we have to do, come here on the top, click on the options. You can see that I have come to the option now. Once I click the option here, it will show me the price currently where Bitcoin is trading. You can see that it is trading around 95,628, right? Time to expiry is 9 hours 25 minutes because it is going to expire at evening 5:30, right? And here it is showing all the expiries. Today I am recording this on 16th January. So this is the today's expiry. This is tomorrow. This is day after tomorrow. Then we have weekly expiry. Then we have monthly expiry. We need current day expiry, right? So this is the option chain. Now what we said, we have to go for 2% away call and put, right? 2% away. Currently this is the ATM. Okay. 95,600 is ATM for call and put. Left side is call, right side is put. And gray colored mean it is ITM. Okay, you can see that till here it is grayed color, and put side this till here it is grayed. That means it's ITM. Now we have to go 2% away OTM. So already I have written down 97,600, right? So that means this 97,600. Okay, and on the put side, 2% away mean where it is. Put side it is 93,728. That means around we'll take round figure. So you can see that 93,800 have a premium of 13, right? And what about here 97,600? 97,600 premium of 6, right? It is not in balance. So what I said, you have to balance it. I mean, it is asymmetry. So you have to go and balance it. So we can see that 97,200, we are going lesser than 2% away, but still we are trying to match the call and put option. So we can go and click this sell button. Okay. And another thing is that strategy builder, you have to click here. Then only you will see here to click the strategy builder here. Then we will 97,200, we'll click the sell button. And what is the premium here? Premium is, you can see that bid is 12, ask is 14. There's a $2 spread difference. That is fine. It's a little bit on higher side, but still far out of the money OTM, still have little bit spread. So still we can go for it. And now here put side, we will go for 93,800. Okay, we have clicked both the sell. So by default, it will show you 200 leverage, that you have to decide whether you have to go for 200 or lesser. Now we have to decide what is the daily target somebody wants to earn. For this video purpose, let me take an example that somebody wants to earn 2,000 per day in this strategy. Okay, his daily target is 2,000. So whenever somebody's target is 2,000 rupees per day, then his risk will be 3,000. That is what we discussed, risk management, right? 1.5 of the target. So somebody says 2,000 target, then his risk become 3,000. Somebody says his target is 4,000, then his risk becomes 6,000. Somebody says his daily target is 3,000 rupees, then he should be ready to take risk of 4,500. That means 1.5 into 1. And you can see that everything it is showing here dollar wise. So we have to convert into Indian rupees. So we will take a round figure of 85 rupees equals to $1. Okay, that is what we have taken for our calculation purpose. 85 rupees equals to $1. Now let us do the position size. Now let me put the quantity here, and I have not yet placed the order. I am only still on the strategy builder. Okay. So you can see that I have put 500 lot of Bitcoin, call side out of the money, put side out of the money. And I click here to see what is the order margin. You can see that I need $477 to place this order. So 477 into Indian rupees 85. That means I need around 40,545 rupees to place this order. Okay. Before that, we'll see whether position sizing is correct. So click on analyze payoff here. So I clicked analyze payoff here. And you can see here how much I'm maximum going to earn this trade if the trade works. Don't worry about on the downside unlimited loss it is showing, because we are going to keep stop loss. Before that, you see what is the profit potential if you take 500 lots. You can see that here, and I'm keeping the cursor here, $13.4. So $13 into 85, how much? 1,105, right? So that is not my target. My target is 2,000. That means I have to increase the lot size. So now I'll increase the lot size to 1,000. Now how much maximum? $27 maximum I can earn if the trade works. 27 into 85, how much? It is 2,295, little bit on higher side, because my target was 2,000 rupees, not 2,200, right? So let us keep it 900 lots only for this video purpose. So you can see that it is 24 into 85 equals to 2,040, right? So that is what we have. Our target was 2,000 rupees in this strategy per day. That means we have to trade with 900 lots to make 2,000 rupees. When you keep 200 leverage, your liquidation price comes near. When you keep 100, your liquidation price goes further away. And if you trade with 50 leverage, your liquidation price goes further away. But still, since we are keeping stop loss here, we can avoid the liquidation. So once you click here, place the order gets placed. But you can see that now time is what? Now time is around 8:17. We have spent already 17 minutes from 8 o'clock discussing this strategy. Now call and put will not be same where we discuss, right? Now what we'll do now, let us see where is 93,800 put option. You can see that currently it is trading at 16. And what about 97,200? And you can see that 97,200, it came to around 11. Right now what we have to do, we can't go for 11 because there will be asymmetry. That means it will not be balanced. So what we can do is we can go for now 97 instead of 97,200. So we'll remove this 97,200 and we'll keep 97,000. Now let us see what is the premium. Premium, you can see that bid and ask 13 and 15. Whatever the put side. Put side also you can see that 14 and 16. Almost similar, right? Now again we have to come here and come to analyze payoff and see. It is now little bit gone up, right? So now we have decreased the lot size. Now we will decrease the 800. Now let us see. Analyze payoff 22. 22 into 85, how much? 1,870. So we can increase into 850. So to make it full 2,000 rupees. You can see that now $24 into 85. Okay, it is 2040. Okay, now we can go for it, this strategy. Now we'll click this so that order get placed. Okay, let me just click this. And you can see that I click the place order and my order got placed. First thing what you have to see, liquidation price, right? 251. Your entry price is 13 and 13. Now what we have to do, we have to keep the stop loss. Come here. And what I said, stop loss, multiply into 5 times. 13 into 5, how much? 65. Come here, immediately put the stop loss once you place the order. Here also 13 into 5, how much? 65. So we have placed the stop loss. Now you can see that our entry here or stop loss here, we have kept the stop loss before the liquidation. Liquidation is 251, but we kept the stop loss at 65. That means we don't have to worry. You can see the total unrealized PNL, it is around $4. I am in $4 of loss. It is showing why $4. Most of the time you see that immediately, the moment you place the order, immediately it will show you in the loss. $3, $4, $5 like. Why it shows? Because of the slippage, right? Because out of the money, far out of the money, there will be some slippage. So what is your maximum profit in this trade? 13 and 13. 13 and 13, how much? 26. 26 into 85. So you can see that around 2,210, that is the maximum profit you'll make, all right? So you have kept the stop loss, but if you want to keep overall MTM stop loss, then how you can automate it? You can 26 into 1.5, that means 39. That means when the MTM comes to 39, you have to come here and close all the position. That means you have hit your stop loss. You can manually come and close it because your maximum profit is 26. 26, then what I said, 1.5 into 1, right? That is the risk reward. So reward is your 26. Risk should be how much? 39. So either when it comes to 39, you can come here and close all the position manually. Or if you have algo knowledge, then you can automate it. Or when your premium 13 comes to 65, call side or put side, whichever side your stop loss hits, come here and close all the position and take the stop loss. But if the stop loss doesn't hit, then this will keep melting. And if it stays sideways, sometimes even by 12 o'clock, 1 o'clock only, it will start showing you almost 80-90% of decay will happen by 1:30 in the afternoon only. You don't have to wait till 5:50, provided Bitcoin stays sideways. Now you can see that you want to see the chart. Click here. Okay, the arrow button, you can click here and you can see that it is already showing you on the chart also. Where is your entry and where is your stop loss? You can see that blue color is your entry and 65 we kept the stop loss. Green color is your stop loss. Okay. And if you want to see the put option side, and here also you can see that on the chart also it will show you where you place the order, at what price 13 we have taken the entry. We kept the stop loss at 65. If you want to adjust the stop loss with the chart only, you can adjust it. If you want, you can click here and you can bring for example, if you want to keep it 75, you leave it and you can see that here also get placed at 75. Okay. So this is the call option. This is the put option. It will show you the size. We have taken 850 lots. So in the size, it will show you 0.85. Okay. So you should remember when you place 1000 lots, it will show 1 Bitcoin. That means full Bitcoin. We have placed 850 lots. So that's why 0.85. Okay. This is the notional value, entry price. What is the price we have taken entry? Index price, mark price, estimation, liquidation price. This is important. Your stop loss should be before this liquidation price, margin, auto top up, and unrealized P&L on call and put option. Okay. This was just to show you that how to place the order and everything. Now I'll close all the position because now we have to see how much trading fee you will be paying, right? So I'll close all the position and once confirm, all order get closed. And when you come to the order history, you can see all the orders, how much you paid the trading fee, how much profit, everything, it will come here. Okay. Now, very important, which I said, you have to look for the trading fee, how much you are paying, right? So what we'll do, we will come here in the markets. Okay. Now come to the bottom of the screen and here you can see there is something called fees, right? Click that. So you can see that once you come here, it will show you feature and option. Currently we are trading in option, right? You click here on the option, BTC option. What was the entry premium? 13 and 13, right? We entered at 13 and 13. So we have to click at 26 and exit. What exit? We are going to exit when the option premium becomes 0, right? 0, we'll take it as a 1 or 2. Okay, we'll take it as a 2. Now quantity, how much we have taken? Now we have taken the quantity of 850. So you'll put the 850. Now, what is the maximum profit? Maximum profit will show you after removing the trading fee. Maximum profit potential in this trade, which I've taken earlier, $21 after removing the trading fee. Now, important is what is the trading fee you are paying? For $21, what is the trading fee you are paying? Total 0.98. That means around $1 you are paying total fee. That is 0.83, including 18% GST. Okay. So that means overall for $21, $22, you are paying almost $1, mean around 5% of your profit you are paying as a trading fee. Okay. So that's about this video on how to place order at 8 a.m. short strangle.
So that's it, guys, about this high probability daily income strategy in Bitcoin options. And disclaimer again, not 100% foolproof. You have seen that sometimes this strategy can fail. That's why we keep the stop loss as a risk management rule. But overall, you have seen that most of the time this strategy can work. And one of the big mistakes where many new traders do that they don't stick on to any strategy. Suppose even this strategy also some people start following, they are happy until this strategy works. But if suddenly back to back two stop loss hits, then they think that this strategy doesn't work and they will look for some other strategy. So that's why most important for a trader is that if any strategy worked historically with a very good win rate, then that strategy have high chances of working in the future also. You should not get upset if the stop loss hits because stop loss is part of trading. There's no strategy in this entire world which can give you 100% profit every day. And this strategy also doesn't work 100% of the time. That you should keep in mind. Okay. So that's about this video, guys. And as I said, if you have not opened Delta Exchange account, then go below this video in the description section. You can open Delta Exchange account. And also, if you like this strategy and if you are interested in this kind of similar strategy, then you can check my course, that is Bitcoin's Option Mastery, which I launched just few days back, where along with this strategy, I have discussed other 7 strategies. That means there are total 8 strategies which are high probability option strategies in Bitcoin. If you are interested, you can check the link, read the content, read the FAQ section. If you are interested, you can enroll for it. So that's it, guys, about this video, and I'll see you soon with a new video. Until then, bye and take care.